Think about the last three things you bought online. You might think you bought them from a boutique clothing brand, a high-end skincare line, or a local coffee roaster. But in reality, you likely bought them from Shopify. While Amazon is the everything store that wants to own the customer, Shopify is the invisible empire that wants to empower the entrepreneur. For years, the critics said Shopify was just for small players, the hobbyists and the side hustlers. But the Q1 2026 earnings report just dropped, and it sent a very different message to Wall Street. Shopify isn't just growing, it is graduating. It is moving from the mom and pop shop to the Fortune 500 boardroom. Today, we are going to discuss the 10Q. We're going to look at the explosive growth in gross merchandise volume, the massive expansion into enterprise territory, and the pros and cons that every investor needs to see before the next market move. If you have ever doubted whether Shopify can survive in a world dominated by giants, this report is going to be your answer. Hey there, my name is Anthony, and welcome to Growing Your Wealth. Okay, let's start with the cold hard facts from the Q1 2026 report. Gross merchandise volume, GMV, this is the total dollar value of everything sold through Shopify. In Q1 2026, GMV hit a staggering $100 billion. That's a 35% increase year over year. To put that into perspective, Shopify is now facilitating a run rate of $400 billion in annual commerce sales. They are now the number 2 e-commerce force in the US, second only to Amazon. Revenue growth, well, total revenue grew to $3.17 billion for the quarter, up 34% year over year. And what's even more impressive, their merchant solutions revenue grew faster than their subscription revenue, which is amazing to see. Growing this number for the quarter at an amazing 39% shows the hyper-growth business is growing faster than expected.
All right, shares of global commerce company Shopify under pressure this morning. A slower growth forecast overshadowing an earnings beat. We need to know more about this. And joining us now, first on CNBC, Shopify President Harley Finkelstein. Harley, always great to have you back on the show.
Great to be here, Jim. Thanks for having me.
Okay, so Harley, before we get into how great the quarter was, and it was great, all the new advertisers you have, the merchandise value going up a lot, I want to deal with this notion that you somehow feel that the business is slowing, which is what the overwhelming evidence of what the stock market's saying. When I read through your conference call and I read through your notes, I don't detect that same level of pessimism that Wall Street seems to have decided in a shroud over your stock today.
I totally agree with you. Q1 demonstrated Shopify's incredible growth. It demonstrated consistent results, and I think also real AI leadership. GMV was $101 billion, Jim. That's up 35%. That is the second consecutive quarter of GMV over $100 billion. Remember, GMV is the merchant selling on our platform, and we've now seen cumulative GMV of about $1.7 trillion on Shopify. Let's talk about the growth side and specifically to your question. On the revenue side, Q1 saw $3.2 billion. That's up 34% year on year. And when you actually add in free cash flow, which was almost $476 million, we saw a 15% free cash flow margin. So Jim, that's 4 straight quarters of 30% or more revenue and GMV growth, and then mid to high teens free cash flow margins. This is Shopify at its best. And then when you add to it all the merchants coming on, we're now 14% of US e-commerce, and we're adding some of the largest companies on the planet to Shopify.
Shopify isn't remaining stagnant and growing modestly. They are aggressively innovating and utilizing tools to help grow their customers' numbers. This means that as their merchants sell more, Shopify makes more. They aren't just a software company, they are a partner in their customers' success. Next, we have the free cash flow breakthrough. This is the metric that used to be Shopify's Achilles heel. Well, not anymore. For Q1 2026, Shopify reported a free cash flow of $476 million, or a margin of 15%. They are now a consistently profitable cash-generating machine. They have officially exited the burn and grow phase and entered the scale and profit phase. Why is the long-term vision for Shopify so incredibly bullish? Well, there are 3 pillars in this 10Q that prove the moat is widening. First, we have the enterprise pivot. For the first time, we are seeing a massive influx of enterprise brands, names like Mattel, Glossier, and even components of IBM. These aren't small shops. These are billion-dollar entities moving away from the expensive legacy systems like Salesforce to use Shopify. But why? Well, because Shopify is faster, cheaper, and more innovative. Second, the AI Sidekick integration. Shopify is utilizing AI not just as a buzzword, but as a sidekick.
You know, I think one of the reasons why I think people love to deal with your company is because of something that's now developed into Sidekick, which is that you have the data. You have 20 years with the data, and that's data that can help LVMH. It's data that can help Orvis, but it's also data that can help someone who wants to live through their dream and be able to have a little bit of money and say, I'll go with Shopify and I can become something big and major. Sidekick's available to everyone, isn't it?
So let me say this. I think this is something that people are missing here. In this new AI era, there is no group we think that benefits more than entrepreneurs. It is making entrepreneurship dramatically more accessible. And in fact, it's accelerating success, which is good for entrepreneurs and very good for Shopify. Let's talk about AI, because it came up a lot on the call. I think it should be very clear right now that Shopify is at the epicenter of the AI era. If you look at AI shopping, we built the infrastructure that now powers AI-driven shopping and connects demand to our merchants. We are the only platform powering selling inside of ChatGPT, Copilot, and Google. And when you look at orders from AI searches to Shopify, they're up 13x year on year. So we've built the full catalog that feeds these AI agents and shopping experiences. Then when you look at the AI-powered merchant tools, you mentioned Sidekick. Sidekick is our intelligent assistant, which is becoming the new way merchants run their businesses. And it's trained, to your point, on 20 years of insight about commerce. No one else has that. And merchants are loving it. Usage is up 4x year over year. So we think that merchants on Shopify are simply better positioned by far than those that are not.
Their AI handles product descriptions, customer service queries, and even inventory predictions. This lowers the barrier to entry for new businesses and increases the success rate of existing ones. If your customers are more successful, they stay on your platform longer. And third, international expansion. GMV in Europe and Asia is growing faster than North America. Europe alone saw a 48% growth in GMV. Shopify is becoming the global standard for e-commerce. They are localized in a dozen languages and handle complex cross-border taxes and shipping with a single click. They are making global trade look easy. As stewards of our wealth, we must look at the risks. No report is perfect. So let's talk about valuation pressure. Even after the correction in SaaS investments, Shopify trades at a high multiple of sales and earnings. The market is pricing in perfection. If growth slows from 25% to 15% next quarter, the stock will get punished, regardless of how good the business is. Also, we have take rate sensitivity. Shopify's take rate, well, the percentage they keep from each transaction is under a microscope. As they move into enterprise space, these massive companies have the power to negotiate lower fees. Shopify has to balance volume with margin. We have macroeconomic headwinds. E-commerce is sensitive to the consumer pulse. If inflation stays high and the consumers, they stop spending on discretionary goods like, clothes, gadgets, stuff that fills Shopify stores, Shopify's GMV growth will inevitably hit a wall. But here's the truth. This is the bullish outlook. Shopify is becoming the operating system of commerce. In the 90s, Microsoft became the OS for the office. In the 2010s, Google became the OS for information. In the 2020s, Shopify is becoming the OS for selling things. Whether you sell on Instagram, TikTok, in person at a physical store, or through your own website, Shopify is the back office that manages it all. They are building a logistics-light model. They sold their shipping business to Flexport to focus on what they do best, software. This was a brilliant move. It turned them back into a high-margin software business rather than a low-margin trucking company. Shopify is a company built on entrepreneurial spirit. It is a business that thrives when others thrive. As an investor, you are betting on the human desire to create, to sell, and to grow. So what are my thoughts? Well, they are promising, as I believe in this business for the absolute long term. I feel like Shopify is where Amazon was in 2015. This company has a runway so long that the mind can't really fathom a slowdown in the near term. Yes, Shopify did take a net loss of $581 million on a GAAP basis in the quarter, and that is really rough to see. But You got to dive deeper into the report to understand why. It wasn't necessarily a slowdown in the business or customers using other options. They had some one-offs on equity investment losses. With that being said, if they didn't have the $1 billion equity loss, their income from operations sat at $382 million, up over 75% from the year ago quarter. With their utilization of artificial intelligence and having it write 50% of their code, they can increase traffic to stores, which will bode well for more money coming their way. So why the massive sell-off after earnings? Well, with the negative sentiment around SaaS businesses and rising costs and LLMs, investors are spooked and don't want to pay a premium for questionable growth with AI headwinds. Also, investors believe they're slowing down their growth for the foreseeable future. Guidance is showing $3.42 billion for Q2, growing in the high 20 to 30% range. Operating profit was guided lower with some analyst expectations, but with the business growing in the 30% range year over year, I'm a believer. I'll stick to my long-term thesis on Shopify that one day this will be a $1 trillion plus empire. While I'm deep in green territory on my investment with Shopify, my plan is to continue holding. If anyone is thinking about taking up a position, the de-risk factor is still very enticing, and any entry position offered under $100 per share is an absolute no-brainer in my honest opinion. I mean, who knows? If this price keeps dipping, I may have to jump back in and dollar cost up. That's how much I believe in Shopify. So where does the share price go over the next 12 months? Well, this is a volatile stock and has violent swings as it is heavily traded. While the share price won't determine my position in the business, I can see it going under $190 or even $80 per share, and even running up to $200 per share. This is the stock market and it does crazy things. The fundamentals are in a good place and management is still executing on an extremely high level. The Q1 2026 report tells us that the foundation is stronger than ever. The growth is disciplined, the cash flow is real, and the enterprise world is finally taking notice. I want to leave you with a scripture that perfectly encapsulates the vision of a company like Shopify, one that seeks to empower the little guy to become a big player. In Job 8:7, it says, "Though your beginning was small, yet your latter end would increase greatly." Shopify started as a single guy trying to sell snowboards online. It was a small beginning, but today it is an engine for millions of businesses worldwide. As an investor, don't be afraid of the small beginnings in your own portfolio. Look for businesses that have the roots to increase greatly in the latter end. All right, that's it. If you're interested to hear my thoughts on the drive-through coffee wars, bam, click right there. You might like it. As always, happy investing and may God truly bless each and every one of you.